So you can clearly see on Friday, 220 million shares traded um, on Friday for the monthly expiration on Tesla, which is quadruple witching, which is the big expiration for the year on futures, bonds, options, and commodities or whatnot. Um, so a lot of options trader target that month for whatever reason, and you can see 220 million shares traded, big volume. And this is a perfect indication that Tesla was hijacked for this very purpose, for options, maximizing options trade, the hedge funds, the day traders, and I'm talking about day trading institutions where they line companies that line up with purely for day trading purposes. They're not really hedge funds. They're collections of day traders who work for a specific company that have access to a lot of money, and they probably collaborated based on the S&P 500 inclusion, knowing that uh, perfectly S&P inclusion is the next day, or the next day on Monday, December 21st is when Tesla is included in the S&P 500, and they know that quadruple witching for all stocks and Tesla 12 December 18th. So on the day that was announced, that strategy was in place and probably collaborated essentially to maximize the option gains, and everyone know that options trader, the only way to get options to maximize option trading is to manipulate the price higher. So those options traders, they need to essentially put money into buying the shares or manipulating the shares, and as the shares go up, the option seller or the market maker who sold the options need to buy the shares to cover for the essential loss, right? If you have the shares and the shares are appreciating, you minimize the loss of your options that you sold, because each day that it goes up, you're essentially carrying a huge loss. So that's why option buying indirectly trigger the price to go up, especially when it goes hyperbolic in this sense. Same thing that happened back in August. This whole event right here, obviously because of the stock split, they used that they hijacked that event to essentially go from, was it August 12th all the way to yeah, September 1st. In this case, September 1st, the new month, perfectly aligned to when and also I think the stock split was somewhere here, but yeah, the new month, perfectly aligned for the correction. In this case, you got November 11th, 17th, all the way to pretty much a month. So a month has passed. So that's a good, I guess, a month from when it started the, I guess the S&P inclusion, perfectly announced in November 17th. A month later, 12th the 18th, quadruple witching, S&P inclusion, 12 the 21st. So, looking for some type of capitulation top, and it should look something like this. Now, here's the event of the capitulation top. You don't see this in the actual graph because this was pre-market, but if you look at the pre-market, if you look at this chart right here, this was all the way to near about 540. The pre-market had essentially, they spiked it all the way up, and that's a capitulation top candle. 540s all the way up here. So you got essentially a tail or a wick that goes all the way up here. Um, actually, I think it was this one, right? Yeah, a wick that goes all the way up to 540 and corrected. And once it corrected, it started in the pre-market, of course. People started selling, gap open, and initial bounce. Then here's the crash, right? So some sort of event like this should reoccur. Now it's not gonna be exactly like this. I'm anticipating, obviously, Monday is gonna be a gap up, initial gap up, and maybe initial sell off. So if I were to wake up early in the morning, I may be able to short this initial gap up, but I think they're gonna rescue it. There's gonna be initial gap up and a short sellers probably squeeze it out. I mean, push it down, and then it's probably gonna recover because it's not gonna repeat itself. That's just usually the case. Recovery, gap, and then open. Hard to say what's gonna happen, but it's gonna be a lot of movements. So there's gonna be a lot of movements, and most likely, if it does get to 700, either in the pre-market or after the initial fight in the morning, maybe in the afternoon, maybe even Tuesday, it'll get to 700. Who knows? Or it could just, that capitulation top is it. It's hard to determine where the top is. If I get lucky, 700 would be hit somewhere either in the pre-market or in the morning. And that obviously will be the target for me to sell the options. I'm probably going to sell the March 19th. Probably this guy right here, March 19th. And you can see right here, you know, even right now, it's lower than the peak, which was in December 8th. So there's some time erosion in the options already. So hoping if it gaps up, should be maybe 100. 100 is a nice fair price on 700. If I can sell it 100, that's 10,000. Sell one share, and maybe add to it if Tesla buck the trend, because you never know if it may buck the trend and continue to go higher. But there's ample time, since this is all the way March 19th, for a correction to happen somewhere from where it is right now, December 24th, all the way to March 19th. There's got to be a correction. So adding another share if it continues to go higher at 120, adding another share. Eventually it's going to correct, and maybe correct to 50, maybe correct down here, maybe even go to zero eventually for March 19th. That is probably the safest strategy, because what I see, I just think this just clearly to me looks like option manipulation, option trading. Um, Tesla got hijacked, and you can see why I believe that is because you look at the 1 minute. Look at the number of shares traded in the last few. I mean, look at this volume. This is so unbelievable. It started somewhere around, I guess, 2 o'clock, the sell off, and it's just trying to push it down. And then you got this wicked up and down, trying to get it at the right price for the options trader. I mean, the people who are manipulating the options are trying to maximize their options trading, or just forcing these shares to go to whatever level it is. Shorts, longs, they're fighting for it, obviously. And there you go. After hours, after it got fixed, after hours, back up. Probably Monday is going to be up here as S&P 500 inclusion. And so that is why probably, I mean, it looks to me like this whole gangs right here are all pretty much options trading, option manipulation, and because of that, that would imply that these are not organic gangs, meaning these aren't investors, fixed income, not fixed income, but 401ks, invest in institution that are pretty buy. I mean, there are always some level of that, but most of this manipulation, most of this price appreciation, this is essentially because of the options, and I don't have obviously the options for December 18th is gone, but it was like huge number of volumes of trading. We're talking about 80,000, 100,000 across the board. I mean, just huge number of options trading, trying to get the options to a or the price to a specific level to maximize their option gains. So even next week, December 24, I mean, the writing is on the wall. There's it's just a lot of options trading right now. So this December 24 is still gonna have a lot of price manipulation. So I don't think Tesla is going to crash any. Well, it may. Who knows? Because the guys who quadruple witching is over, and it may be the time where whoever, the institution, the collaboration of the hedge funds and the day trader, they might say, well, let's pocket to a new stock. Let's find a new stock. And it may be a new specific for Apple, Google, Amazon, who knows? They need a new candidate, essentially. I mean, Tesla may continue to be that candidate. Or there may be another candidate, but essentially they're gonna find that yeah, it's not going any higher. I mean, it may stay at 700 for a while, and they say, "Yeah, this is it. It's time to leave." And once it leave, all these, I guess the shares that they forced to go higher, they need to get out. And there's just no way to go out except to essentially just get out as soon as possible. And so that's gonna just trigger some major sell-off. I mean, it's gotta be something at least like this. I mean, I mean, yeah, I just don't see how they're gonna rescue it. I mean, they may rescue it for a little bit, because there's so many options traders that still trying to get it to specific level December 24th, maybe the end of the year options. I mean, this is weak right now, but it may pick up strength. But this is right now showing to be weak. So December 24, that looks like the strongest options. The last option week. Maybe this will pick up. Who knows? It just doesn't look like there's enough volume to me. To me, I think December 24 is it. That would be this week. And that would be Christmas, right? Nobody want to be dealing with options trading after Christmas toward the end of the new year. I mean, why deal with it, right? So I would say that this week, at best case this week, it will stay relatively high and will bounce around, and then it'll probably have that major correction. But it may even start next week. Who knows? It may very well be a similar scenario like this where there's a capitulation top in the pre-market, and it's just because there's really no reason to continue having it at this high level after the S&P 500 inclusion. um, Here's the S&P 500, right? There's 500 companies. Apple is heavily weighted, 6.4. Microsoft, Amazon. So you can expect Tesla to be uh, maybe at 2%, I would say. Well, maybe a little bit less than Alphabet. Between Alphabet and Book, because this is a 450 billion. This is 500, and Tesla is sitting at 640 billion. So we're saying, yeah, 640 billion gotta be around 2% weighted for the index. So S&P 500 is gonna have to include Tesla. And I don't know if they already bought the shares. Who knows? Maybe if they haven't bought the shares, then they have to start buying the shares on Monday. If they do start buying the shares on Monday, then obviously that's why we get to 700. And obviously Tuesday, it may take them 2 days to get that type of allocation. 2% is quite a bit. I mean, to get that much percent into the allocation, I wouldn't think they start buying on Monday or that start the purchasing on Monday. I mean, but maybe that's why, that's why traders know that S&P is gonna have this artificial, not artificial, but this additional stimulus or additional purchasing power that help Tesla. So yeah, let's I may have to research that a little bit more, but it doesn't really matter to me. I think the buying of the S&P 500, I mean, it's you're gonna see it Monday, Tuesday. 700 is already too high. All these buyers, they're gonna have to get out eventually, so they want to get out. So they're probably timing to sell it as S&P 500 is buying it just for an easy transition. I mean, that makes the most sense. If you purchases all these stocks to maximize the option gains, you gotta eventually gotta get out because you need to find another stocks to maximize the option gains for next year. Obviously, they're probably done for the year, but even then, why would you park your money in Tesla? There's no reason to park it here if you're not a investment institution. If you're not a 401k, why would you park your money? Even if it's not going down, there's just no gains being up here. You don't gain anything unless you sell. So why not sell it as S&P 500 is buying it? That just makes the most sense. So that to me looks like the fairly obvious, strategy why, a month later, everything kind of lines up, right? A month later, break out of the 61.8%, break out of it, stay up for a day, capitulation top candle, and reversal. So I probably, obviously, I probably have to sell that, that those calls, those 700 calls on Monday morning, maybe even short in the pre-market. A few shares, probably have to trade it a little bit. I'm not gonna want to. I mean, who knows? It may just go straight down, but I'm not gonna risk that. And I may even buy some puts. Well, I may probably buy the puts if it's say up here. I don't think I'm gonna play with the puts just yet until I see what happened on Monday. There should be enough time to get in. I just don't want to be there may be a misdirection or a head fake, a bear trap, because this just seems too obvious to me. But oftentimes the obvious play is the correct play. But you want to minimize the risk. I think selling the cars, collecting that 10,000. If it continue to go up, sell another car. That would be 20,000 or more. And also shorting would be easier to play than, well, who knows? Also buying the puts, I guess, but yeah, so everything else, the QQQ, and here's the monthly. Everything looks strong. Obviously, you can see this. This is a red candle. And Friday. So I don't think it's gonna crash for the year. But the other thing is if Tesla do correct. So if Tesla do correct, then the S&P 500 has to correct because now that Tesla is including the S&P 500 and also the QQQ, if there's a major correction in Tesla, I think Tesla now becomes the benchmark company for the indexes. I mean, it's kind of looked like um, it kind of looked like they tied in together because I'm seeing where Tesla once it starts to correct the QQQ, also you can see it start to correct as well. So the QQQ is reacting. It's really reacting to Tesla. I mean, it's so funny that one company, at 640, it used to be Amazon. It probably at one point was Apple, but now they diverge from those two companies and pretty much diverge from the FANG stock and essentially they reprogram the algorithms, the program managers and the people who are dealing with actuary data and computation for the algorithms. They build these complex algos or programs to do their high frequency trading, and for whatever reason they selected Tesla to pair it with. And so pairing it to Tesla really means that, if Tesla takes a huge correction, kind of like a flash crash or whatever, it triggers the other indexes to kind of react to it. As funny as that sound, yeah, you can see the S&P, and once it is included into the S&P 500 starting next week, it's gonna probably pair a lot more, trade in tandem a lot more. Shouldn't affect, well, yeah, it did affect IWM as well, and maybe IWM is paired to the other indexes. But yeah, it's kind of funny that that's just the way it is. Um, but yeah, as far as the indexes, they all look pretty strong right now. I don't see any reason. Well, again, if it's paired to Tesla and Tesla correct. So yeah, if this is a capitulation top for Tesla, we'll see how well. I mean, this would be a perfect example to benchmark. If it does correct, how well does that pair with the indexes? And if I am correct in my in what I'm seeing correlating, if my correlation data is correct or judgment is correct, and Tesla do correct, and you should see the indexes correct as well, as that would imply that they do pair. And that would obviously mean the whole, I mean, I already know the whole indexes or the whole stock market is a casino, manipulated, whatever you want to call it. But if the indexes are tied to Tesla, that just pretty much tell you it's all fake, in a sense that, it's hijacked. The stock market is hijacked by hedge funds, day trading institutions, and it's not, wherever the values are, it really isn't, intrinsic. There are options manipulation related. Apple, yeah, Apple still looks strong. Individually, Google looks, yeah, now it's at the, yeah, good point. Hopefully it can get down to the 50. Maybe a bounce candidate, perfect bounce candidate at the 50% retracement. I'm not gonna stay in it long, but this looks like a perfect. I mean, I've been seeing a lot great reactions off of the 200 stocks that are reacting off of the 200 are trading very nicely. Um, um, Bouncing off of the 200, that's probably the strongest bounce target right now is the 200, but 50 is pretty strong, especially when it lines up. You can see 50 is lining right up with the gap up, so that's a perfect candidate to, they push it down 1700 to a nice level to essentially either sell the puts, or you can buy some shares. I mean, 17,000 is quite a bit, but and, you can get 1-2%. It's a pretty nice and safe play. Yeah, and this is what I'm talking about, right? The bounce right off of the 200-day moving average. I mean, these are just perfect level to bounce off of. So bounce off of the nice. I mean, I did get a little bit gain. I didn't stay very long. The reason is I was anticipating. I think on the weekly it was gonna go down to the 50. I still think it's gonna go down to the 50. So these whole moving averages tend to me. I'm hoping Tesla. I mean, BABA do move down to the 50. But that intermediate or that temporary bounce off of the 200 is a nice gain. So that's a nice. Let's see, Facebook. Nothing there. Baidu. I mean, this just broke out. I did say I got into Baidu. I got out at some point. I forget where I got out, and then boom. Yeah. I mean, this is where I'm thinking. Yeah, this is where you get the most gangs, and getting out early is something I probably need to work on a little bit better, because missing out on these gangs really do hurt, in the sense that you have the right strategy. I think I got out because it showed like it was getting weak. It always does that, right? And sometimes it do correct, or a lot of times it do correct, but then when it breaks out, So breaking out candidates like this, where it breaks out of this top right here with growing volume, I mean, a lot of the time that is when I guess the traders hijacked it. And a lot of time this happens when you have a stock like Baidu, who essentially sees, all these shorts are in it. It's so weak. It looks like it's dead in the water and it's gonna be dead for years on end, and then boom, for whatever reason, it gains strength and some kind of news catalyst or whatever, boom, it just forced all the shorts to cover. And you can see snow. I mean, look at that. This just all these shorts gets to cover. I was looking for I think the 50 moving average still is a nice bounce candidate if it gets down there. Although this is already a nice bounce, so yeah, we'll see. Shopify, look, I mean, this thing just looks so powerful now. Yeah, I would say this. I mean, it's also been hijacked for whatever reason, and but surprisingly, the volume isn't as high, so this is not really an option hijacked. But I still say this is a reversal candle. And so, I mean, who wants to buy it up here? I mean, I guess it can get to 38.2, but for me, probably a safer bet if I see weakness on this guy, sell the calls or buy some puts or even short directly. Zoom, yeah, Zoom hanging top. So this obviously looks weak. Any additional bounce, hoping for any huge catalyst bounce where they're trying to get the shorts, maybe to this 38.2 level. That's when I probably enter in a short position for next year. Obviously, next year, the vaccine around the corner, the vaccine play, you definitely don't want to be in the stay-at-home stock like Zoom. Uh, Peloton is strong though. Short squeeze Peloton. Look at that short squeeze. But I think weakness on this guy next year. Probably, who knows? I mean, this might be because it's such a small stock. It may continue to squeeze out the shorts, squeeze out the shorts all the way to 750. But eventually, I mean, they can't hijack it and force it all the way to 150 or even higher before it corrects. So you have to monitor this closely. Netflix, yeah, not gonna deal with that. Nvidia, uh, TTD. Look at this, guys. Continue to go up, but the the IPO stocks. Look at that. I mean, that's where you get this huge gangs is when you time. So essentially, these IPO stocks they are able to shorts and also options trade it. So it gets all the way down here, and I did pick up Dash at some point, but I got out way too early. Again, missing out all of these gangs. I mean, geez. Same thing with Airbnb. I mean, back all the way back up here. So these IPOs, big IPOs, the one that like at 10 billion, whatever, they do get hijacked as well, and there are potential opportunities. Anytime there's a visible stock that essentially is a hot candidate, they are going to get hijacked for option trading. So right now Tesla is the golden child again, will be the golden child again next year. But after the correction, it will always be, well, not will always, but it's the best hot stock, golden child stock for next year as well. It's gonna be the most volatile in the sense that options traders are going to hijack it and just going to either run it up or down depending on the news. Run it all the way up, obviously, and then, once it gets too high, they can't make any money anymore, so it has to correct. Stays down, stays there, looks like it's dead in the weeds, looks like it's lost forever. And then there's some stupid news, whatever, Battery Day 2.0 or whatever, some news, Elon Musk announced some, plan to go to Mars or whatever. Any news, and then boom, it gaps up, hijacked, and it runs all the way back up. And so these essentially they're day trading hot stock hijack candidate, and so that's what they do. And that's what they do to the IPOs too. Like you can see, Snow was hijacked. Boom, hijack, run it up. 17 billion, big enough. Shopify, well, not Shopify's not an IPO, but Roku, 36 billion, kind of expensive now, but it's made its run. TDD, all these guys are expensive. Um, Let me see. Zoom is dead. Dash, Airbnb, Net was hijacked, 20 billion. So yeah, look at that. Boom. So look for some IPOs. I'm probably gonna continue to look for IPOs, hot IPOs. Big C, this one, secondary offering, so it's dead in the water. The other secondary option is IQ. This one, I'm looking to get essentially down here, probably add if it goes. Want to get my first lot around 16 or a little bit below 16, something like 15.8. This shouldn't be a scam stock. Hopefully, it's not a scam stock. It's at whatever IQ was. I can't see if I find it. Here it is. 12 billion. Too expensive to be a scam stock, in my opinion. Secondary offering or third option or whatever they would call it. Secondary offering. So it's down here. Essentially, eventually, it's gonna go. This is the Netflix for the Chinese stock. So good stock. Same with Big C, secondary offering. So it's really low right now because of that secondary option offering, but eventually it's gonna go. Um, you know, yeah. Let me see. Anything else? Lilly, no, Pfizer. I think Pfizer is a good one. Look at that. Gonna hit. Did hit the 200-day moving average and bounce a little bit, but retrace. I think this is a continue. This will be a nice one to continue to hold. Uh, Probably looks pretty decent in my opinion at where it's at. The other one, so I did pick up Pfizer, pick up Humana as well at the 200. So this one is also, I'm hoping. I mean, it's looking kind of weak now because it's not really bouncing, but it could be option manipulation for that Friday option expiration, and then it's gonna go. So that's what I have. Let me see, Costco. So the first bounce target for Costco is gonna be the 100. That's a nice bounce target. Not gonna touch it anywhere until it gets to technical level. And even at technical level, if the market is crashing, it's gonna go right through that technical level. So it really depends on the stock market. I mean, it may not get to this until next year, so I wouldn't hold my breath until it actually get there, and if market condition is good. The other big question mark is the stimulus. So they're still talking about the stimulus. I forget. I'm still waiting for that stimulus to come out. And so uh, that stimulus bill, I don't know if it's come out this year or not, but if they do get it out next week, that will be probably the last catalyst to bounce everything, right? Just to push everything up, push Tesla up. Amazon is so manipulated too. I mean, this one, right at the 200-day, I mean, this one was so manipulated. They forced it all the way below. I mean, here it goes to this level and then boom, push it all the way down and then landed right at 3,200. Such a manipulated stock. Number one manipulation is Amazon. And I mean, who knows what's going to happen. If there's going to be a big news, um, then it'll run. But otherwise, without any real major catalyst for Amazon, I guess it's just gonna continue to play around. Looks to be going down because this is I guess, a stay-at-home stock in a sense, or classified as a stay-at-home stock. So it's highly manipulated. Although Q4 Christmas earnings, I guess the stimulus would help this stock the most. If so, yeah, if they're planning on releasing the stimulus bill, I mean, this thing would be a good catalyst. The writing is kind of there that if they do the stimulus bill, pass it, Christmas spending, Q4 spend or Christmas holiday spending, kind of would push this up. So that would be kind of like something where it's perfectly aligned. Options traders, maybe they're positioned for that, and it did bounce off of this level, but that's only because of the 3200. So it did bounce to get to that 3200, and then next week we'll see. I don't know. I'm not confident that the bill will pass, or who knows if the bill will pass. It should pass, but it hasn't passed yet. So if it does pass, yeah, this thing would obviously it was gonna gap up really big. Um, so you gotta have to play in anticipation of it and get and kind of front run it. You can't really get in after the fact because it may just gap up really big, and if you gap up too big, then there's nothing you can do. But I guess play the wiggle or whatever. But I guess that's all this. There's probably another stock I can go through. I did get run. So this one, yeah, I'm actually I got some runs somewhere around here. I got started to run, yeah, run starting to run, but then it reversed for whatever reason. But it looks strong, and probably gonna target 70 and maybe break 70s. This is a nice solid one to hold, I guess. The other one to eventually hold, I mean, obviously the stay-at-home stuff, the vaccine play, obviously. Any correction down here, like this guy here, Norwegian Cruise Line. Uh, any more further correction, United Airline. Down here, 200-day moving average, perfect lineup. 200-day moving average. Let's go, United Airline to that level. Beyond Meat, I do have this one. I think eventually this one is a no-brainer in my opinion. No-brainer for a huge potential. 10 years from now, this may be, yeah, 10x because I think eventually they'll break through and figure out how to make edible, substitute non-meat ingredients that taste once they break through and find a way to make it taste perfectly, edible, nice like meat, or even taste even better meat for whatever reason, if they can get that technology, make it nutritious, make it healthy, make it really clean, green, this just meat is just going to be too much demand for meat, too much demand as the world continues to grow, the third world country continue to grow. There's just too much demand for meat. So once they able to get the technology or the products, I mean incrementally, I mean ingenuity would take over, and they should be able to figure a product that essentially this is a 10x in my opinion. Eventually, 10 years from now, so that's a nice one. CRISPR, obviously DNA splicing. I mean, they're probably gonna create a mutated virus with this technology. COVID, 10 years from now it'd be COVID 30, whatever you want to call it, and it's gonna probably kill all of us. But for the meantime, this DNA splicing technology is probably gonna be very favorable. Still very expensive right now. 10 billion is pretty cheap looking, but price wise, it is kind of expensive. But I wouldn't mind adding to or getting into it on the correction next year. Oh, Verisign. This one, at the top. I'm gonna actually wait for it because it went from once you get to a low like this point where it's like all the way low, it normally spring very far up, so it may spring above this level, and that's probably when I would short it. And so that's it for now.